How to build a recession-proof portfolio. You've probably heard it a million times. We're heading into a recession. Maybe it's already started. Maybe it's just around the corner, but here's the real question. Are you prepared for it? Will your portfolio survive the storm, or will it get swept away like so many others? Now, before you panic, here's the good news. Building a recession-proof portfolio isn't just for financial experts. It's something you can do too. And by the end of this video, you'll know exactly how to build a portfolio that can weather any storm. Is your portfolio like a tiny inflatable raft in a hurricane right now? Let's fix that, shall we? Understanding the recession impact. First things first, let's talk about what a recession really means. A recession isn't just a dip in the market. It's a widespread economic slowdown that affects businesses, jobs, and consumer spending. In short, things get shaky. But here's the kicker. While some people will panic and sell everything in fear, the smart investors will take advantage of the situation. In fact, the best time to build a strong portfolio is when the market is at its lowest. So how do you not get caught up in the chaos? It all starts with having the right foundation. Stick around because you're about to learn the secret to building a recession-proof portfolio that can thrive, no matter what the economy throws at it. Diversification, the key to stability. All right, let's dive into the first step, diversification. If you remember one thing from this video, it's this. Never put all your eggs in one basket. Diversification is your safety net. By spreading your investments across various assets, sectors, and industries, you reduce the risk of a single market event wiping out your wealth. Imagine this. You've got some money in stocks, some in bonds, some in real estate, and maybe even in commodities like gold. If one area tanks, the others can keep you afloat. The more diversified, the more recession-proof your portfolio becomes. Think of it like a buffet. You wouldn't just fill your plate with mashed potatoes, right? You want a little bit of everything. That's what a recession-proof portfolio looks like. The power of defensive stocks. Next up, let's talk about defensive stocks. These are companies that provide essential goods or services that people need, no matter what. Think healthcare, utilities, and consumer staples. These sectors don't rely on the economy booming to make money. In fact, during recessions, they tend to do better because people still need food, medicine, and electricity. When the economy struggles, the demand for these types of products doesn't go away. So adding defensive stocks to your portfolio can help shield you from the worst of the downturn. But here's the trick. What if I told you there's an even better strategy to protect your wealth? One that's not just about surviving the recession, but actually growing during it? Let's talk about that. Bonds, the safeguard against market volatility. Let's dive into bonds. Bonds are your safe haven asset. When the market is volatile, investors flock to bonds because they offer a fixed return. It's like your safety cushion, especially when stocks are throwing temper tantrums. During a recession, bonds, particularly government bonds, are seen as a stable investment. Why? Because they're backed by the government, meaning they're less likely to default. And here's the best part. As stock prices fall, bond prices tend to rise. Let's put it this way. If stocks are like a wild roller coaster, bonds are like a leisurely ride on a Sunday afternoon. A lot more stable, right? Real assets, tangible investments in uncertain times. Now let's talk about real assets. These are investments in physical things like real estate, precious metals, or even art. When the economy is unstable, real assets tend to hold their value better than paper assets like stocks. Why? Because they're tied to tangible intrinsic value. Real estate, for example, can be a great hedge against inflation and economic downturns. And let's not forget about gold. It's a safe haven that has stood the test of time, often rising in value when the stock market crashes. But how do you actually get started with these real assets? And more importantly, which ones should you focus on? Let me show you how to take action right now. Cash, the liquidity you need to seize opportunities. Finally, let's talk about cash. It might seem counterintuitive to keep cash in a recession, especially when inflation is eating away at it. But here's the thing. Cash gives you flexibility. It allows you to seize opportunities when they arise. When others are panicking and selling their assets at a loss, you'll have the cash to buy undervalued stocks or real estate. Cash is your ticket to striking when the market hits rock bottom. And trust me, when the next recession hits, there will be opportunities. The key is to be prepared when they come. Building a recession-proof mindset. But here's the thing, building a recession-proof portfolio isn't just about the assets you choose. It's about the mindset you adopt. You need to be ready to stay calm and think long-term. The best investors aren't the ones who react to every market swing. They're the ones who have a strategy and stick to it. When the next recession hits, are you going to panic? Or are you going to look for the opportunities others miss? Are you going to build wealth while everyone else is losing their heads? The choice is yours. So, are you ready to build a recession-proof portfolio? To not just survive, but thrive? The key is to take action today. Start diversifying. Start researching bonds, defensive stocks, real assets, and holding cash. And most importantly, build the mindset of a successful investor. Don't wait until it's too late. Check out this next video to learn exactly how to make your first move and take the first step towards financial freedom, no matter what the market throws at you. Remember, wealth isn't built by avoiding risk. It's built by preparing for it. Let's make sure your portfolio is ready for whatever comes next.